Okay, we continue on the second part of the video. Okay, so another another factors that we should understand in the audit and CG of international perspective is the audit environment itself. Cultural value, as we learned in the early chapter, which is cultural value in different countries, can have an impact on the nature and the quality of the audit work undertaken. For example, we are talking about perception of auditors' ethical conduct may be influenced by cultural norms. Similarly, perception of auditor independence may vary as a result of underlying cultural and environmental differences across the countries. Thus, culture may be helpful in understanding the differences in auditor behavior patterns in different countries. Okay, so for example, we are talking about the concept of an independent auditor in neither historically nor culturally appropriate in Japan, and legal liability suits against Japan auditors are almost non-exist. Okay, but if we look in China, their culture values, okay, so including respect for senior, the desire to avoid confrontation and to look for agreeable compromise, and the concern for saving face. Okay? Because of this culture, it's likely to have implication in the audit judgment area. Further, history in China also plays a part in shaping the practice of auditing in China. Okay. The various environmental factors affecting auditing issue can be identified in terms of broad concepts often referred to as accounting infrastructure, which include producer of information, the final user of the information intermediaries, laws and regulation, and also legal entities that monitor and implement the laws in the country. In less developed countries, in particularly, creditors and investors plays a minimal role in the accounting infrastructure. And so, accordingly, a less developed auditing profession compared to that in developed country would be expected. So, in sums, we said more advanced in financing or creditors and stockholders, more evolved the audit profession of the country. If we look on the legal system, different legal systems are also likely to influence auditing in different countries. This one we already learned in the earlier chapter. For example, we are talking about court law, a codified Roman law system that exists in countries such as German and French, which may require more reliance on the state legal objective of the accounting profession. But if we look at countries with a common law system such as UK, Canada, or New Zealand, this country may allow audit characteristics to develop more freely or rely more on the auditing profession to set a general tone for the profession. Okay. So the differences in the environment in which auditing operates can have implication for the transfer of auditing technology among the countries. We look another environment which is technologies. The international diversity in accounting and security market regulation and practices, economic and political system, pattern of business ownership, complexity of business firms, and stages of economic development may affect the nature of the demand for audit services and complexity of the audit task. Therefore, we can say that audit technology that are cost beneficial in one national setting can be ineffective or even dysfunctional in a different setting. What I can say is, for example, audit technologies in the developed country, for example in US, may be the cost benefit. But if you apply the same audit technology in other setting, okay, let's say in the less developed country, it will be not effective. Okay. Another factor is the audit quality. Audit quality is also likely to vary across different audit environments. Okay, so what is audit quality? Audit quality can be defined as the probability that an error or irregularity will be detected and reported. Okay? So the detection probability is affected by the actual work done by the auditors to reach their opinion. This in turn is influenced by the level of competence of the auditors. We are talking about eligibility and qualification. Yeah. The requirement regarding the conduct of the audit. We are talking about quality review and monitoring, and the reporting requirement. The reporting probability is affected by the audit independence. Okay, so nature, normally we are talking about of legal liability regime. Okay. The next subtopic that we will look is the regulation of auditor and audit firms. The approaches taken to regulate auditing in different countries range from those that leave the task largely in the hands of profession to those that really rely heavily on the government. Okay, so it varies. For example, in the United States, okay, or in the Anglo-Saxon, okay, they regulate the auditors within framework of self-regulation. So if we look in US, the SEC registered the audit firm. It said they must be members of PCAOB. And the PCAOB is actually has authority to establish or adopt auditing standard, quality control standard, and ethic rules for conduct of auditing. They also have authority to establish audit firm. In UK, the word accounting is not defined. So they are not, when we said not defined, it's not defined in statute. And there is no qualification requirement in order for someone to practice as an accountant. However, most accountants, we are talking about accountant, but not the auditors, choose to qualify under professional bodies. Okay. So the Companies Act of 1985, so this one we are talking about UK. Okay. So this prescribe a statutory scheme for regulation of auditors under Department of Trade and Industry. DTI is Department of Trade and Industry. So, these Company Acts recognize certain accountancy bodies for the training and supervision of the auditors. And if we look the Company Act 1989, so this one based on EU directive, statutory auditor must have professional qualification, and they are also subject to requirement of recognized supervisory body and specific provision for independence of company auditors. Okay. So if we look in, we still in UK, okay, the Accountancy Foundation, which is founded in 2000, this is this accountancy, their emphasis on the non-statutory independent regulatory of 6 chartered accountancy bodies, and they monitor the work of accountant and auditors, okay, handling complaints and disciplinary violation, and conducting investigation. In 2004, the responsibility of AF, okay, Accountancy Foundation ni, AF, okay, was taken over by FRC. The responsibility for determining who might be recognized as statutory auditor has been delegated primarily to 4 CCAB members. So this is the CCAB members. We are talking about SCCA, ICAEW, ICAI, and ICAS. So this is the member of the CAAB. Okay. So what happened is, under this regime, FRC became the United Kingdom and unified independent regulator for corporate reporting and governance. So what is its function? Okay, so its function, which relevant, of course relevant to auditing, include the following. They will set, monitor, and enforce auditing standard, statutory oversight and regulation of auditors. They operates independent investigation and discipline, scheme for public interest cases involving accountants, and oversee regulatory activities of professional accountancy bodies. Okay? The FRC also responsible for the 2012 Code of Corporate Governance. So the requirement, okay, so for this one, the requirement for becoming an auditor, we said, okay, so this is when we look on the requirement to be auditor, it's actually may vary in different countries. Okay, so we will look only on 3 countries. For example, in US, they said in US there will be uniform system of examination. There will be one examination, uniform. Yeah. So unlike in the US, okay, there is no system of examination in UK. But the 3-4 professional bodies, the one that we discussed, the one, okay, these 4, 1, 2, 3, 4, okay. So these 4 professional bodies, they will conduct their own examination. Okay. On the other hand, if we look in Germany, the examination for the prospective auditors are set by the Ministry of Economics. And self-regulation of the auditing profession takes place within the strict boundaries of the law. Okay. So in China, the government is heavily involved in the regulation of auditing profession. Remember, as I said just now, most of the corporate is state-owned. Okay, so China accounting and auditing profession is sanctioned and regulated by the state. So So all certified public accountant, we are talking about CPA firms, both state-owned and privately owned, are under the supervision of the local audit bureau, which is itself supervised by the state. Next, we look on the audit report. There are significant differences in the audit report across different countries, and sometimes it's actually across different companies within the same country. So we will look, or we will describe some of these differences. Okay? So audit reports in company annual report from different countries show a variety of applicable audit standard and format. Okay? So, for example, we are talking here. Okay. Audit reports sometimes they are referred to local audit standard or non-local audit standard and multiple set of audit standard. Or because of the differences, because of the audit report itself addressed to the different audience. We are talking about the shareholders model, stakeholder models. Okay? And if we look in the US, we are looking on the Sarbanes-Oxley Act, where it's include a requirement to provide assurance on the internal control. Okay. So, for the international standards on auditing, you call it ISAS. This is professional standards for the performance of financial audit, and they are issued by the IFAC. Okay, so through the International Audit and Assurance Standard Board, IAASB. In the United States, the Auditing Standard Board, or ASB, is a division of the American Institute of Certified Public Accountants, ICPA. Okay? They will promulgate Generally Accepted Audited Standard, GAAP. Okay? Okay? For non-public companies and the public companies, PCAOB. Okay? Promulgates GAAP for public companies. PCAOB also consider IASB standard in developing its own standard. Okay, so there are differences between GAAP just now, as I said, Generally Accepted Auditing Standard, and ISS. ISA is International Standard on Auditing. Similar to those when we are talking about GAAP, remember, so similar to those between GAAP, where GAAP is actually rule-based standard, and IFRS, which is principle-based standard. So this is also the differences between GAAP and ICAS. In other words, we can say that US standards are more prescribed compared to international standard. Okay? For example, GAS require auditors to obtain an engagement letter before they start audit work, whereas there are no such requirement under ISAS. In regards to documentation retention policy, okay, GAS require the auditor work to be retained for 7 years, at least 7 years, whereas ISAS required the audit work to be retained for at least 5 years only. GAS provide for reporting on financial statements that are prepared in accordance with Fair Presentation Financial Reporting Framework and Compliance Financial Reporting Framework, okay, Whereas if we look in ISAS, it do not necessarily require fair presentation. What else? GAS require two categories. Okay, two categories. Okay, of professional requirement, okay, unconditional requirement, and presumptively mandatory requirement. Whereas ISA require only one category of professional requirement when such requirements are relevant, except of course in rare circumstances. Okay, so what happened is in 2004, okay, so because they are different between this one and this one. So in 2004, the PCAOB commenced a project to clarify or to convergent GAS with ISAS. Okay, so under this project, US must name engagement partner and tenure. They must include discussion of CAMs. Okay. They must communicate it to audit committee. Its material to financial statement and subjective or complex audit judgment. Next is audit expectation gap. So what is the meanings of the audit expectation gap? Yeah, the meaning, the definition. The meaning of the term audit expectation gap has been defined in several ways. For example, if we look, one of the definition is the difference between what the public and financial statement user believe auditor are responsible for. Definition number 2, the difference between public perception of duty of audit profession and what it's provide. And definition number 3, the difference between society expectation of auditor and the performance of auditor. Okay? And one of the biggest factors contribute to this expectation gap has been controversy about the auditor's responsibility to detect fraud. Further, this gap actually also related to the audit process and result and can be broken down into a number of categories. There will be 4 categories. Okay, 1, 2, 3, 4. The first category is normative gap, which encompasses both the role of the auditor, meaning the scope of the assurance or other service being engaged, and the responsibility of the auditor to provide certain level of assurance over information within that scope. So, number 2, information gap. Okay. Number 2 is interpretive gap. So, an interpretive gap arises from different interpretation of stakeholder and market participation regarding what the existing audit requirements are for auditors or what should be communicated to the user about the audit process and result. Okay, so this is about the interpretation. Number 3 is information gap. This category is when the stakeholder and market participants need one more information than what is actually available through the audit report about the audit and the result of the audit. Okay, so the information need by the stakeholders and market participants is different. And lastly is performance gap. So what is performance gap? Performance gap can exist between the actual auditor performance and the requirement of the standard. The standard needs the auditor to perform like this, this, and this. but the performance of auditor is like this, this, and this. So, because of this, there are gap in the performance. Okay. So, how to how to bridge, how to close the gap. Both the information users and the auditors of financial statements needs to take responsibility for bridging any of those gaps. Okay, so in terms of user, what the user need to do? First, the user need to understand auditors only provide reasonable assurance and not absolute assurance. Number 2, audited financial statement cannot help in all decision-making situations. Number 3, audit work require judgment, which sometimes the judgment might be incorrect or misleading. And number 4, user needs certain degree of knowledge on how to interpret financial statement. Sometimes the gap exists because of the user didn't understand how to interpret the financial statement well. Okay. In the perspective of the auditors, so how the auditors, or what the auditor should do to bridge this gap, the auditors need to understand the user expectation. Okay. So when the auditor understand the user expectation, so they will provide or at least they will close to the user expectation. Number 2, make audit report easy to understand. Avoid technical jargon as much as possible. And number 3, do not leave any effort undone to provide as reasonable level of assurance as possible. Okay, so we will stop here for the part 2. We will continue on part 3 of the video.